Dear viewers, stay tuned for another edition of the Cryptoverse Weekly Report. Bitcoin opened the week very well, with a jump to $65,000, after which it extended its climb towards $68,000 in the following days, which is the best result in about 2.5 months. Now, of course, this reignites the narrative of Uptober, the month in which BTC historically achieves great results, and which in halving years, such as this one, is the prelude to rapid growth during the fourth quarter. The leading cryptocurrency may indeed be starting to position itself for an upcoming bullish trend that should lead to a new all-time high, although the correction should, of course, not be ruled out. And today, among other things, we bring you Bitcoin is less than 10% away from its previous price record. More serious correction or continued growth? Next week may bring the answer. American BTC ETFs have recorded a 5-day streak of inflows, during which they removed more than $2 billion worth of Bitcoins from the market. The dominance of the crypto king is approaching 60%, which is bad news for altcoins and investors who are waiting for the alt season. However, the climax and reversal could be near. Memes dominate the crypto market again. And the market is in the green as the week closes, as Bitcoin bulls attempt to break through a 7-month consolidation period. Whether the green will manage to push the price of the leading cryptocurrency above $70,000 and then towards a new record already this month, or whether there will be a rejection and another correction before a further rise, it should be clearer next week. And the reason for that are historical patterns, that is, the past cycles. Namely, we should not forget that we have just entered the second half of this month, and the strongest pluses are usually recorded in its last 10 days. And although the current monthly gain of around 7% is still far from the average that Uptober brings, this week's move still gave the market reason for optimism. With a 7-day increase of more than 10% at the time of recording, surpassing the current record of roughly $73,700 is really not out of the question, as that would only be a 10% increase from the current levels. And if that were to happen, BTC then enters a so-called price discovery phase, where from a technical point of view, there are no resistance levels and FOMO awakens in its most violent form. So everyone will be talking about Bitcoin and suddenly desire to buy this weird digital asset. But we'll see if there will be enough strength for such a breakthrough in the coming days, or if a little more consolidation will be needed. Although the optimism on the market is palpable, as can be seen from the Fear and Greed Index, which with 73 points is strongly in the greed zone, it is very easily possible, indeed even expected, that with regard to this week's price growth, there will be at least a partial profit-taking. Namely, strong jumps bring more and more owners of the leading cryptocurrency to the position of unrealized gains, which is often considered a sign of an overheated market, which usually precedes or coincides with price corrections. This is supported by data from the on-chain analytical platform Glassnode, which shows that short-term holders of Bitcoin, that is, those who hold a certain amount of BTC for 155 days or less, on Monday moved the largest number of Bitcoins into their wallets on the leading global crypto exchange Binance from setting a price record in March of this year. Additionally, open interest in Bitcoin futures rose to an all-time high of $38.4 billion on Wednesday. When the previous peak was reached in September, Bitcoin failed to break the resistance at $66,000, and a correction of more than 10% followed in the next few days. However, it should be noted here that strong open interest cannot be considered an inherently bearish or bullish signal, but rather, its increase creates volatility in the price of a particular asset. So this is a more pessimistic scenario in the short term, which is by no means certain, but which should not be shunned upon, and which, if it were to play out, would be a completely normal stage in the broader bull cycle, and a kind of market cleansing before new attacks on the all-time high. Of course, it is entirely possible that Bitcoin's breakout will continue, and that investors, anticipating an upcoming new record, will not decide to sell, at least not to a greater extent, and that BTC will continue its multi-month rally. After all, if we look at the last halving cycle, that's exactly what happened. Bitcoin was climbing unstoppably from October, and in 7 months, from roughly $10,000, it jumped above 60K, that is 6 times. Of course, yields decrease with each new cycle, but despite a possible milder rise, the trend could correspond to historical patterns. And we shouldn't forget that for the first time in this cycle, we have billions of dollars pouring into crypto through ETFs, but also potential trillions of TradFi dollars that will be included in the game, because the biggest financial institutions are still watching the experiment with ETFs from the sidelines and conduct due diligence. Once if or when that capital starts pouring into crypto, price spikes will simply be inevitable. And while Bitcoin, after the jump above $68,000, decided on a temporary consolidation and pause, which is to some extent expected considering the considerable jump this week, the demand on the spot market, especially from the aforementioned ETFs, remains constant and strong. US BTC ETFs are on a 5-day streak of inflows, during which they have removed more than $2 billion worth of Bitcoins from the market. The flagship ETF alone, BlackRock's IBIT, attracted $1.7 billion this week. In 2024, ETFs have thus become one of the main price growth catalysts and the primary source of new capital in the crypto market, resulting in more than $20 billion in cumulative inflows since their launch this January. To put that in context, it took 5 years for gold ETFs, that is for those that trade in the yellow metal, to reach that figure. Accordingly, the number of Bitcoins on exchanges fell to 2.43 million pieces. That is, more than 20% compared to the record value of 3.37 million BTCs reached in July of 2021. And we know what happens to the price when the supply of some good, some asset, falls while the demand rises. In the medium term, 2 other factors are quite important for the price of Bitcoin: macro data and the presidential election. Macro data from the US will determine the moves of the central bank, that is the Federal Reserve, as far as additional interest rate cuts are concerned. Lower interest rates encourage liquidity and reduce the appeal of traditional and safer investment products, such as government bonds, and shift the focus of investors towards riskier assets, such as cryptocurrencies. In this context, it should be said that the U.S. Department of Labor reported that claims for unemployment benefits decreased by 19,000 last week, which shows that the U.S. economy is still relatively strong. In addition, the Ministry of Trade announced that retail sales in August increased by 0.4% compared to the previous month. As a result of these good economic indicators, the market's expectation regarding the extent of rate cuts that the Federal Reserve will take next month has decreased. According to CME Group's FedWatch tool, more than 90% of market participants now expect a minimum cut of 0.25% next month. The option of 0.5%, by which the Fed lowered interest rates last month, is no longer considered at all. Another factor that analysts cite as important for the movement of the Bitcoin price, and then the crypto market in general, is the U.S. presidential election, which will take place in 2024. This is not important only because of the choice between the pro-crypto candidate, as Donald Trump is viewed, and, towards that topic, ambivalent, or rather vague, Kamala Harris, but also because of historical patterns. Namely, the U.S. presidential election coincides with the Bitcoin halving years. During 2016, BTC started to rise 3 weeks before the election day, and the price almost doubled from $600 by the first week of January. In 2020, the price of BTC struggled for months, but it also started to rise 3 weeks before the election, overtaking $40,000 by January, compared to the pre-election value of only $11,000. And considering that history, although it does not repeat itself, is often imitated, the next few months on the crypto market could be very interesting. Additionally, given the excellent entry into the second half of October, there is a growing narrative that the leading cryptocurrency will leapfrog the current all-time high of $73,700 even before the U.S. presidential election. As a reminder, the election is scheduled for November 5th, which means that the new record should come either already this month or at the very beginning of the next. Bitcoin's dominance, that is, its share of the entire crypto market, has approached 60%, reaching its highest level since April of 2021. Increasing BTC dominance is generally bad news for altcoins, as it means investors are focused on the leading cryptocurrency. Accordingly, there were no major changes in the biggest alts this week, albeit with some exceptions. And of course, memes. When and if there will be an alt season, given this rather different cycle, in which Bitcoin is now available to investors through regulated products in the form of ETFs, is a question that preoccupies the crypto community, especially the part that targets the previously seen sudden alt jumps, which bring gains of several tens, even hundreds of times in a short time. Some analysts, such as Benjamin Cowan, predict that the 60% limit is the peak, after which the focus could shift away from Bitcoin. If that is indeed the case, alt season could be coming relatively soon. However, the market is currently boring. The king of smart contracts, Ethereum or its Ether, has risen by around 8% this week. But even with that upside and the current price of $2,620, Ether is still down about 25% from 3 months ago, reflecting investor aversion to the recently launched spot Ethereum ETFs. And the reason could be the priority given to Ethereum Layer 2 solutions. Additionally, over the past 7 days, the Ethereum network has seen a drop of more than 20% in the volume of on-chain decentralized applications, fueling speculation that the price of Ether could follow the example. BNB recorded a weekly shift of 4.7% and Solana's Sol of 7.6%. XRP is in a daily minus of 1.4%, but also a weekly plus of 2%. The daily red was probably contributed by the U.S. Securities and Exchange Commission's appeal against the court's decision in the dispute with the XRP issuer Ripple. It is important to note here that in its appeal, the SEC does not challenge the decision that the sale of XRP to small investors via crypto exchanges is not securities trading, which is very important for the future price movement of this cryptocurrency. And now we come to the 9th-ranked crypto, which is one of the aforementioned exceptions. Doge rose more than 20%. Of course, on the wings of Elon Musk. Musk keeps mentioning his favorite digital asset, which is pushing this meme hard. Doge received a final push when the Tesla CEO mentioned the name of the meme coin during a town hall meeting in Folsom, Pennsylvania. One attendee asked Musk if he would lead a new department or ministry for government efficiency. Musk replied laconically, "Yes, I would lead the Doge," prompting cheers and applause from the audience. Namely, under Trump's presidency, Musk could take over the Department of Government Efficiency, whose acronym is certainly not coincidentally Doge. Meanwhile, Tron's TRX, Toncoin's TON, and Cardano's ADA decided to become stablecoins this week, so there is practically no progress with them. As far as winners in the top 100 are concerned, in first place, you wouldn't believe it, is precisely a meme, namely Cat in Dog's World with an increase of 47%. White Bitcoin follows, and then Athena, which presented a new proposal to use Sol as a backup asset for its synthetic stablecoin, USDE. And the list of the 5 best is closed by 2 more memes, Brett and the already mentioned Doge. Memes are clearly here to stay, and it's hard to even guess what kind of madness we could be watching if the real, parabolic alt season is coming. And so, with meme tokens, we have come to the end of another Cryptoverse Weekly Report. If you liked the video, please give it a like, leave a comment, and it also won't hurt if you click subscribe. Thank you for following. Kind regards for this week.